Well, here on September 3rd, first trading day in September, after the Labor Day long weekend, we saw some major weakness led by the tech sector. So I thought I'd take a quick look at the Qs, the NVDA ETF, to help us see what we can expect ahead. So I'm Hema Reddy. I use price, time, and momentum to boost my trading, that of our tribe. So here we go. I'm on the monthly chart. That's right. Every candlestick is 1 month of price action, and here are the Qs. So a couple things. You see that I have little annotations on some of my candlesticks. Those are actually very important support levels that I ascertain from inside the candles. I also have other annotations on here that are representative of some of my forecasting methods, right? So all of those helped be prepared for the action into the high in July, but the consolidation and the recovery that happened in August, that's all contained within this candle right here. So let's just change this to the weekly time frame and look at that in more detail. So spreading this action out, okay, you can see that all the action in the latter part of July and August was contained by the week ending April 19th and that mid-April or mid-July week ending July 12th. And that's still the case. But now within the context of that, the market recovered from the middle of the week ending April 19th, attempted to return to the week ending July 12th, couldn't get there, and is now rolling over. Now this is with the RSI power zones, my favorite momentum indicator, holding in the bear resistance power zone and rolling over. So if you're one of my forecasting students, you might be thinking it's time to draw a forecast to the downside, and you could. However, notice that there is now this support coming in from this entire range from the week ending August 9th that is likely to provide an important area of support. So the high, the middle, and the low. Okay, so I would look at those three levels in a weekly chart and then map them over to your daily chart. I'm just going to take what's on the weekly chart right now and leave it here and then do a fresh daily chart. So the other thing I want to observe is the high of the week ending April 23rd or August 23rd. Man, mixing up my Aprils and Augusts. So the week ending August 23rd, you can see real close here that this week's high was just 0.04 shy of the low of that range. That tells you how important it is, all right? So mark those two ranges and then carry on from there. So I'm just going to go ahead and switch to a completely different time frame, daily chart, and show you what I got. Now, I started noticing this when I did my top markets review. So every weekend, I look at 20 top markets, and the Qs are one of them. I start with index ETFs and move on from there. And I drew these lines, and this told me that, hey, this looked like potentially a bull flag. But as you can see now, we have closed outside the lower range of the flag, so this is likely invalidated. But it's still useful because that annotation movement that I just did on the daily chart, or excuse me, on the weekly chart, I want to do here. So now I want to bring attention to this range on the support side and this range on the resistance side, okay? That's what I think you should be really watching close if you're trading the Qs. Let's add in another element, which is an important retracement. It's a 50% retracement. So for this, I'm going to thicken up the line a little bit so we can just see the difference. Do you see how we went from the weekly chart, first ascertaining this move higher, considering this decline, and then looking at the recent move. But now on the daily chart, we're more focused in on the move down off of the high from August 22nd, okay? Now, none of this means that we're going to push a whole bunch lower. Remember, every time we have days in the markets where we have these big moves, you got to look at what the after effect is. Like I remember the day, Monday, August 5th, that was recent, where we had a big downward move and everyone was freaked out. And look, the market just recovered from there. I'm not saying that exact thing will happen now, but you should really pay close attention to what happens next. Because on this daily chart, the RSI power zones, my favorite momentum indicator, are now back in the bull support power zone. There's room for them to try to find a footing. I don't think it's super likely, but it's a potential, okay? In addition to that, there are actual higher lows from the prior daily chart sessions that I would mark as important support levels. All right, now I'm going to do something where I'm going to take this specific chart. I'm not going to go to a different 60-minute chart. I'm going to take this chart and I'm going to turn it into an intraday chart. Let's go to 60 minutes. Now, 60 minutes for me for the tech index is a little bit of a fast chart. I prefer to study 120 minute, but I know a lot of our index ETF traders are intraday, so I wanted to give you this analysis. So everything I just showed you on the daily chart is now showing on the 60-minute chart. And check this out. Notice how we had, after the formation of this August 7th low, a move from the bull support power zone to bull resistance, right? Then we had consolidation, which on the Qs started to unfold as a flag. Then we had a push lower today. And notice how the bear zones are running the show. So there's what's called red zone domination right now on the Qs. If you study my RSI power zones indicator, you'll see more about that. And so that tells me that bears are still likely in charge. So I want to narrow into more recent resistance. So see how every time I go down a time frame, I'm getting more focused on the most recent move. It doesn't mean the rest of it doesn't matter. It just means I want to narrow in my focus and then expand it back out. So here's some resistance levels that I would monitor. And I'll provide more context after I draw them. I'm not using any sort of formula or any sort of calculator to tell me that these are important. I just wanted to show you on my own here, and I'm drawing them based on price action. So the most important ones right now are 463.44 and 465.93 are recent bar highs. We have 470.51, which is an old bottom. That's an important GAN approach, GANN, to discovering support and resistance. And then we have a price high, which was also a price spike, which was also at this line, which was extracted from the daily chart. So on the 60-minute chart, this line is not as relevant because we have to redraw it. But keep in mind that the range here of this hour ending 4 p.m. on August 30th, okay? That range, look at how the low of that is so close to that daily chart low that we marked previously. So that's very important resistance up there. So if there is a rebound, which could be likely, there was a doji, there was a hammer, right? There could be some recovery attempt after this really strong push to start the week. These are the levels I would monitor if you're trading the Qs. You can translate this over to the NASDAQ and other markets as well for their comparable levels. The key here is whenever there's extreme market moves, guys, don't assume that they're going to keep pushing in that direction. Let the market tell you. So in this case, what would the market tell me? It would only make a minimum recovery, if that, and then it would have weakness set in early in the Wednesday, September 4th session. And I would want to see that weakness push below 458.40 to then take us to those other downside targets on the daily chart. So that's the thing. If you're a short-term trader, it doesn't really matter what the trend is as long as you can identify and ride it. And that's why I love the short-term trading options. Yes, there's volatility. Yes, you got to be careful, but there's many avenues to be able to trade. Now, the Qs I commented on here because of the action in NVDA and the legal topics there of them being approached and investigated and all of that, which drove tech to weaken today, which then drove the S&P and the Dow to weaken, okay? But my happy place, if you will, is the S&P 500 markets. I provide research and live trading on those, so if you're interested in that and you're new to the tribe, just reach out. We can share information, but I definitely am going to monitor my top 20 markets that I look at every week to make sure I'm staying on top of the macro trends. So if you found value in this video, please hit the like button. Please subscribe to the channel if you haven't already, and please comment down below. I took time late in the day here to film this from my mom's basement because I'm visiting her, and that's where my office setup is. And I couldn't believe that while I was off tending to family things, this is how the market was behaving. So no rest for the Riri, right? All right, well, see what unfolds for the rest of the week. And remember, September is historically weak, but that doesn't mean you just short every day. Okay, you want to follow the price action and your other data. And we'll see what unfolds. Catch you next time.